Ladies and gentlemen of the crypto space, we're live on a Friday, December 5th at 11:30 a.m. And lo and behold, nothing has changed. You're looking at the most important inspection you possibly can about crypto markets. And in the circle on the right here is three candles. One, two, three. So every conversation that we've had, every conversation that you've seen on social media, every popular social media post that you've been like, whoa, what's going on, has occurred within these three boring single candles. Now, obviously, you could say it's been even less than one candle if you look at the monthly chart, but there's nothing really constructive to look at on the monthly unless we have some sort of systemic event, and that is not occurring thus far. So, from what is meaningful, some sort of substantive inspection, it's really the weekly chart, in my opinion, that deserves the closer look. So thus far, we have a mean regression to the weekly 100 SMA. We punched through the 50 SMA, the darker green line, which was trend through 2024 and earlier in 2025. So this is an increasingly large mean regression. But that's all it is. It's a regression to some average price point over some reasonable time frame, and the market tells us what it thinks the appropriate price for this commodity is. Um, the market is like a single actor, it's like one investor. And obviously, it's the aggregate of everyone's individual behavior. But this is what the market is telling us the price is and should be. Because every time we interact with this 100 SMA on the weekly, we find some sort of support. So the big headline for today is Bitcoin falls below $90,000 yet again, and $200 million in liquidations, and cue the Darwin Awards for the folks that use leverage, and the majority will fail to have a more rigorous, more reasonable investment methodology, or even an investment methodology at all. They will continue to gamble, leverage long, leverage short. They'll lose all their money, they'll blow all their savings, and they'll just not realize the value of four simple rules. And what does that do? That creates a tremendous amount of volatility in a relatively highly volatile asset. So, exactly what has always been the case continues to be the case. This asset called Bitcoin is extremely volatile. That leads me into basically since Wednesday. So, since Wednesday, the fee switch on yield basis went live. And so, what does that mean? We're used to the fee switch always being live on Curve Finance. We're used to the fee switch always being live on the drones. So it took a couple minutes. I mean, not really many minutes, less than 2 months for this fee switch to be live on yield basis, while you have 5 years waiting for the fee switch to go live on Uniswap. And I don't think that is going to work out so well for the very reasons that the drones have highlighted. But the point is, a fee switch is a meaningful thing, especially once it's activated. It's not going to deactivate. That would be a detriment. In fact, the fee switch is critical to the circular flow of capital through the monetary policy of which yield base is created. And guess what? When I see the volatility of Bitcoin, when I see all these hundreds of millions of dollars worth of liquidations, and when I see this price point interacting with merely the 100 SMA, and I remind myself that it's all bullshit on social media. It's folks that have absolutely no time horizon or shitty time preference. My mind really just goes to what is a good opportunity. What what is an opportunity? When do you see an opportunity? And it just so happens with the fee switch being enabled for yield basis, I saw that as the opportunity. So obviously, coming off the heels of the launch of yield basis and knowing it was basically Michael's idea, and what Michael built with Curve and leading into yield basis, knowing what he's capable of, knowing what his associates and teams and Swiss Stake are capable of. Clearly, there was interest from the get go. I'm not the type of person that buys that launch price. and the token generation, and that was oversold by what, 100x. People were paying $1, $2 a token, and obviously the market humbled those speculators really quickly. Um, Down to the tune of 36 cents. And then you hear all the bullshit like, oh, 36 cents, this is a failure. And the first thing that comes to my mind is the price isn't the product. So the price is irrelevant. So what has occurred with the product is the inspection to make, and the price is not even to be considered in the equation other than from an acquisition standpoint. So the acquisition, or when to acquire, which is rule number two, know when to not buy, the antithesis being know when to buy, needs to be satisfied not based on price, but you look to price whether it's a discount or it's not. And how do you inspect a price point, whether it's a good price or not? That's your XYZ equation. How much does it cost? How much is it paying? And how likely is it to continue to pay? Well, considering the nature and structure of the protocol and how Michael builds protocols and the iteration of the current monetary policy, which basically yield basis is a derivative thereof, um, and the fee switch being enabled, it's going to continue to pay into the future. So Z is probably the best in the biz right here with regard to will it pay into the future. From a contract perspective, it certainly will pay. Now, from a protocol and the business model perspective, hmm, it pays based on the volatility of Bitcoin. What is the primary headline today? Bitcoin falls below 90K and everyone's freaking out. There's $200 million worth of liquidations. And I'm like, yeah, I'd like to make money off that. That's the revenue stream that I want. And so you look for confluence. Was it a reasonable price? Can XYZ be resolved favorably? Can that simple equation work? And it was the case, because there was confluence also with the relatively short lifespan of the technicals. So this was about at 45, 46 cents. I saw the rejection here a couple of hours back. This is a 4-hour candles because that's how new the asset is. It's a brand new asset. And there's your initial hyperinflationary decay until people realize what the hell is going on. This reminds me of like the launch of Curve, except highly compressed and just structurally. I mean, it's really weird because this is I wish I could draw overlays and adjust relative time frames a little bit better from a trading view perspective to express what I see. I mean, this is almost like you zoom out to like the monthly chart, maybe not the monthly, maybe the weekly on Curve. It's almost like your initial hyperinflationary decay, some sort of balancing of the monetary policy, which this was convex, your initial convex, and this was obviously 2021, which is your Bitcoin bull market, which drove it where it went. So convex came online and balanced things out a bit. Then the bull market carried through, creating the second wave of exuberance into its blow off top. And then you have this multi-year period of consolidation. I mean, it's hard to talk about that in terms of something that's been online for 2 months. But that's kind of what you see here. You have this initial hyperinflationary decay, you have this initial stabilization, and then you have this period of consolidation, and then you have this breakout. The breakout is clearly a manifestation of people now being able to inspect the XYZ proposition. And the proposition is quite remarkable. I don't have the posts, and there's Yield Basis Monitor. There's a site that aggregates the weekly revenue, and the weekly fees, I believe, are consistent over a 4-week period. So it's over 100% APR, and that's pretty wild. And obviously, that's getting diluted as we speak. But you know how much it cost? This was on Wednesday. It was about 40 something cents, 45 cents. And we know how much it's paying because now we have a fee switch enabled and we have initial APRs because the flows are going to be are 4 weeks out, so we know what we're going to get next week, and the week after, the same as this past week. And Z's satisfied as well. So all of a sudden, out of left field, what was a protocol of interest and a business certainly of interest finally had all the check boxes checked. Um, Cash flow enabled, XYZ equation satisfied, and reasonable price point from technical positioning satisfying rule number two, know when not to buy. Now is probably when not to buy. You don't buy after a relatively short period of minor exuberance. It's not like it's a lot of exuberance going from 45 cents to 58 cents. But there's from an odds perspective, there is great odds for a period of consolidation after a, this recent appreciation and relatively meaningful green candles on a 4-hour time frame. Now, the 4-hour time frame is quite misleading. Go over to the daily. These are some serious daily green candles, and you could easily see your mean regression down to the 10 SMA, 47 cents. I don't know. I don't make the rules. I don't. I don't acquire or adjust the portfolio about based on a technical inspection. Um, I probably be for best said, I'm increasingly hesitant to make acquisitions at this price as compared to near or around a meaningful moving average. And from a 4-hour standpoint, punching through the 200 SMA was a meaningful moving average. Now, obviously, there's a lot of things that could be said about that statement for 200 SMA in the 4-hour chart. What the hell does that even mean? That's a short period. That's a short time frame. It's not like I'm looking at the weekly or the daily even. So, but the problem is, this is such a new asset. You don't even you don't have those kinds of time frames to do an inspection on. So you have an increased risk reward profile for thinking of portfolio restructuring or an acquisition such as this type of instrument. The best thing that I could say is everything that I just described from the start of the stream presents a more interesting investment opportunity, certainly more confident investment opportunity as compared to the token generation event and all that pre-sale stuff that went on. I had nothing to go on back then. There was no, we had speculation based on revenue. There was a lot of uncertainty. A lot of folks didn't like the credit lines that were getting extended, the CRV USD credit lines. But nowadays, I think the story is quickly changing. And I think the risk management of the yield basis team is quite refreshing, especially what we see from the curve proposal which just dropped, ladies and gentlemen. If you go over to governance and you go over to proposals, the Michael dropped the increased credit line for yield basis from 300 mil to 1 billion. That just dropped. Now this gets enacted next week. I'm sure it's going to get enacted next week. It's going to be very interesting. And this is where we want it to be. Now, if you look over, is this the document? I don't think that's the document. Yeah, it is. Um, so Michael breaks it down very nicely. Um, what's pertinent is this. They get it. They get it. And this is what I always talked about why Frax got it with the AMOs. And when Curve came online with the peg keepers, I was like, this is even better. So you can't just unleash depth, liquidity depth. You can't just print. You need to have control over the environment. Everything, so yield basis, people think about yield basis as a business, but it's really CRVUSD, not just as a facilitator of the feature and functionality that yield basis offers. Um, Yield basis is completely dependent and responsible for the safe operation of CRVUSD. And that means the value of CRVUSD is everything. So you cannot negatively impact the value of CRVUSD dependent on varying conditions. And those conditions are very much controlled by the peg keepers. So the peg keepers are buffer, and, and they facilitate a capacity for CRVUSD to absorb price fluctuations um, that typically take a little bit more time to process. So under two circumstances uh, is the price of CRVUSD controlled. Obviously, peg keepers have a capacity to mint and burn, depending on how much liquidity depth, how much printing they've done themselves. Peg keepers have a free credit line, also, so to speak. Um, but otherwise, it's interest rates. Interest rates are what control downside peg. So when the peg keepers are operating, interest rates remain low. You don't have to increase interest rates in order to manage downside peg. And obviously, when you're overpriced on CRVUSD, the peg keepers are printing, and you just have increasing CRVUSD supply, whoopie-doo, because you don't want it to go over a dollar. How many stable coins have we seen go over a dollar? So the hard part is really the underside peg. The overside peg is the easy part, but it all really comes down to this whole synergy of pressures. And those pressures are very much controlled by peg keepers and interest rates. Um, and that is really what makes CRVUSD stand out. So by yield basis, discussing this reality and understanding that these limitations, you're not limited explicitly. You're limited implicitly because you don't want to destabilize the capacity for yield basis to access credit from CRVUSD because of unstable market conditions that need to be managed by relatively slow acting interest rates as compared to fast acting peg keepers. So you really want to stay within the realm of peg keepers maintaining control. So, and that's the whole point. That's the point of this article explaining the $1 billion credit line. You're not just blasting $1 billion into circulation. You can't. You could increase the credit that CRVUSD extends to yield basis if and only if the peg keepers have a reasonable amount of capacity. And that is what is discussed here. So yield basis TVL cap. So these caps are going to be dynamic from what I could say. Um, 2x of absorbable CRVUSD based on maximum imbalance. So when I see things like this, I'm like, oh my God, that's exactly how you optimize the the not the risk aspect of this relationship between yield basis and CRVUSD. This is exactly how you optimize what needs to be optimized for this shit to actually work the way it needs to work. It's all about the currency, the dollar unit of account, the CRVUSD. And it's not about yield basis respecting it. This is what it takes for CRVUSD to be the best stablecoin. Y- This is how you manage things the best way possible. And it's very exciting to see this type of respect and this type of understanding of what goes into a stablecoin. You know, for years, I've said many things about stablecoins, but first and foremost, the most important thing isn't TVL, not the amount of stablecoins. It's the capacity for the stablecoin to be $1 always, because it's all about trust. As long as the trust isn't breached, the stablecoin will grow in mind share. It will grow. Therefore, trust grows, and therefore people hold it, and therefore the peg keepers have an easier job, and therefore the peg keepers can actually have increased liquidity, increased depth. The more people that hold CRVUSD, the greater pressure there is for CRVUSD to be over a dollar. Therefore, the peg keepers are minting. Therefore, the peg keepers have supply that can be burned. And if you're burning it, you have a capacity to manage both upside and downside of the peg. That's crazy. That this has never been done before. And when we say that, never been done before, like crypto's been around for 100 years. This has never been done before in the last 5 years. None of crypto's been done before prior to 5 years ago. None of this has ever been done before. At the top of the law, this, what's being discussed here, it's so damn exciting. This is not only the bleeding edge, this is some of the few teams that get what it takes to deploy something that changes things. And this protocol seems to be doing exactly that. I am excited to say the least to see the $1 billion credit line expansion because it is treated with respect. And that's exactly what this document shows. That the credit, if it's treated with respect, the currency will be stable and that will benefit both the Curve ecosystem as well as the yield basis ecosystem. And from what I could tell, yield basis is the little printer that could. It's not about this price. This price. Listen, why is this price irrelevant? Because you're not buying it to sell it in the future. I bought it and I locked it. And you go over here and you go over to lock and you go over to permalock and you permalock your shit. Because if you permalock your shit, you're protecting your investment from yourself. You're protecting it from yourself. We are our greatest investment threat. So maybe now we come to the point where how did I acquire capital for this portfolio restructuring? I no longer have the same sentiment or the same interest or the same belief, not belief. Investing isn't about belief. I no longer have the same interest in the kingdom. And it probably is because of locking. I am a fan of locking because the greatest threat to a portfolio is me. And if something can be sold at some point, it needs to be sold, especially when market conditions warrant it. So the problem is at some point, macroeconomic conditions roll over and you sell everything. That's not nailed down to the ground. But look, this is an instance where something more interesting, a better opportunity is available, something more disruptive, and it could be sold. Therefore, it's an obligation to sell something that can be sold for something that is better. And when macroeconomic conditions turn, fuck, a dollar's better. It's the same exact thing. Um, so I no longer have exposure to kingdom. It is what it is. I was one of the more opportunistic early folks that got exposure to Ramses at a very cheap price. After Nile, after Cleopatra, I never got those drops, but um, that is what it is, and that was my choice. No Shadow, no Etherex, and no Ramses on Hyperliquid. Uh, cut and reclaimed, losses incurred, and reallocated. And I more or less have the exposure size I'd like to yield basis. Like to have the yield basis and the rest of the exposure to meet exactly the number that I want, I'll probably just get from Vote Rentals on Vote Market. Simple as that. Hope that helps, ladies and gentlemen. 12% on the day. Seems like a lot of people share the sentiment. But the problem is most people are buying price as the product. So when you see price go up, people tend to buy things that are going up in price. And that's the nature. There's a bull market somewhere, always, just the way it is. So there's your FOMO. Um, Around the 200, that wasn't really FOMO. That was just me on Wednesday and seeing 110% APR, and I was like, "Oh, that's cool." Oh, and this was like at 4 o'clock in the afternoon, and then and then and then you come over. Bitcoin's obviously coming down, but it was about $400. This was like a 35,000 yield basis locked. Permo locked. And now I've been able to scrape together about 91,000. So I need about 9,100. I want to get to an even 100,000. and then I'm cool. And it's a reasonable number. I don't have more cash than that. I'm not willing to spend more than that, and that's okay. Do I want more? Sure. Would it be interesting to have a larger position? Sure, but I don't have it. So based on the available capital that I have, that's probably the exposure that is most reasonable. I cannot justify a larger exposure, and anything less is okay for now because I could acquire it without spending any more money. Lord knows I got to save up for my kid's school next year. Arrow, good morning. Always a pleasure. Rob, yes. Killis, always a pleasure. My man, Sekatsu in the house. Can you please give your thoughts on future continued relationship benefiting V Curve and VLCVX? Yeah, the synergy is extraordinary. As long as both yield basis continues to respect the realities of CRVUSD, the liquidity depth for CRVUSD keeps going up, which means the lendiness keeps going up, which means the trust keeps going up, which means exactly what anyone would imagine. How do you get CRVUSD to arbitrage any of this stuff? You could either borrow it from Lamaland or you could mint it, print it. It's as simple as that. So the synergy's there. I would love to see $10 billion in yield basis and $5 billion worth of CRVUSD and people paying interest on $4 billion worth of CRVUSD and more credit lines, just more credit lines, just as long as the peg is respected and the peg keepers are managed with regard to how much pressure is put on them. And that's what it takes for this to work. The synergies are extraordinary. So VLCVX is all about the price of CRV. As the price of CRV goes up, the vote rentals become more lucrative because that's exactly what people are renting from CVX. So CVX has a couple of knock-ons in order for its price to be reflected out of as a result of yield basis. So yield basis will strengthen CRV USD. CRV USD will strengthen Curve ecosystem. Curve ecosystem will affect convex as a knock-on as the price of CRV appreciates. Simple as that. In a bull market, all of this happens in like 5 seconds, by the way, guys. So we're not in a bull market, and we're not having a macroeconomic conversation at the moment. So that's something for maybe another day. Um, so it's not happening in 5 seconds. So what you're seeing is our performance in a pretty shit market, which is quite extraordinary to say, which means it's something to write home about. Something's occurring, something's being observed, people are noticing what's going on. It's meaningful, it's constructive. I mean, you don't see this kind of price action unless something meaningful is going on. Yield basis is pure V tokenomics. No, modified tokenomics, these are NFTs. This is what Convex complained about to a degree with regard to the lockers. And I don't know all the nuances or how, at least how to verbalize them uh, in entirety. But clearly, uh, um, uh, Stake DAO has a wrapper product for yield basis. My 2 cents, all that stuff, all those wrappers are derivatives. They fall into business model number 3 on my list. Foreign exchange, credit derivatives, liability printing, and liquidity financing. And I am not a fan of derivatives at all. So that's my 2 cents on a yield basis derivative. So if anything, my choice was clear. Permanently locked the EYB to such a degree it's permanently locked, which means I have zero capacity to liquidate it. And that's exactly what I want, not just from a fiduciary standpoint, from an accounting standpoint, but also for really from an accounting standpoint. If I have no technological capacity to liquidate it, and I have business rules that require permanently locked assets to never be liquidated, what's the fair market value? So, I have with regard to like the drones, aftermarket sales, you got to put in like a 10, 20, 30% discount. That would be fiduciary negligence to sell something at that kind of loss intentionally, a known loss, 20% loss. So that's an easy one to justify. You can never sell it because that would be negligence. So those are, for all practical purposes, permanently locked assets. This is even more permanently locked, and that's why CRV, the ECRV, is probably the best asset from an accounting standpoint, period, in all of crypto, because it is just permanently locked. There is no one in their right mind that could justify waiting 4 years of decaying voting rights. That would just be complete negligence. Do you miss the Kingdom projects yet? No. Do I think of all the projects, obviously, Ramses has the most potential, but guess what? Ramses has the most potential because of Hyperliquid, and that shit is stupid. I hate perps. I hate trading. I hate gambling. I hate that whole mindset. And hate is a strong word, but I hate that shit. It's just degenerate. It's gross. And I don't want anything to do with it. So I like foreign exchange. Obviously, it's business number one. But the problem is, what are what are the what is being done with Ethrex and Shadow? It's all fucking meme coins and wrappers of Bitcoin and Ethereum, but that's not where the volume is for Bitcoin and Ethereum. All the volume is either on mainnet or base. So Hyperliquid, what hype? The hype token? Who gives a shit about the hype token? I don't. It's not where I want to be. The main attraction in crypto is mainnet and base because of Coinbase. That's it. And because of Coinbase, because of the drones, now all of a sudden you wrap in the entire um, optimistic superchain. So pulls it all in. And then now with the base bridge to Solana, it just pulls in Solana. So I have a high opinion of Solana and Nirvana and Samsara. So I think that's going to be interesting. Um, Arbitrum's falling by the wayside. I don't, I'm losing interest in it, and I don't see it tied or tightly coupled to these primary markets where the liquidity is. The story for Arbitrum is hyperliquid, and to me, I have no interest in that. That's my 2 cents. Hope that helps. Musical morning, good morning, Brian. Hey, Cap, finally able to catch a live stream. Always a pleasure. Joel in the house. Good morning, Cap. Teddy, go, go, go. Good morning. Good morning. Hassoon in the house. Tom Lee saying ETH goes to 60K in the next few months. Do you think that's materially even possible? It's irrelevant. How does it fit into my portfolio? I don't have much Ethereum at all. I cover gas. I probably have a couple $100 worth of Ethereum scattered on a couple of different chains. That's all you need. I mean, look at the gas fees on mainnet. Oh my God. These gas fees on mainnet. Man, with the Fusaka upgrade, woo. Mainnet's the main attraction, ladies and gentlemen. I don't care whether it goes to 60K. I think that's primarily driven by exactly what everyone knows to be the case, macroeconomic conditions. And for that, I want to see 10-year get below 4%. Now it's up. It's just up 4.13. It's just not going in the right direction. But move and DXY are in constructive positioning. Dollar, you want a DXY, not the dollar per se, is below 100 at least. But move is definitely in a constructive position, almost punching a lower low. Move could easily drive the dollar lower. It's kind of like dog dog wagging the tail or the tail wagging the dog. Leads and lags. Which one leads? Which one lags? I don't know. It's kind of both. But you still want to see that collateral price. So the 10-year coming down is your global collateral pricing going up. Um, so frankly, you can still see outsized global currency supply increase, global debt supply increase, with relatively non-appreciating current money supply, the treasury supply. So because the banks will just accept it. They're like, all right, this is what it is. This is the price. As long as the volatility is low, As long as that move indicator keeps crashing, the banks are going to open up their credit because over the last years, they've increased the assets on the books. Now they're going to have to increase the liabilities. And when the volatility in the collateral is low, they're like, all right, fine. Here's what we're going to give you. Here's the credit we're going to give you. Here's the liabilities we're going to print. Um, that's what the move indicator represents. So that's why the move indicator is a forward-looking indicator on global currency supply expansion. Right now, the banks at 65 are like, all right, if it stays low in the next quarter and the Fed's lowering rates and the long end 10-year plus finally starts to come down a little bit, at least below 4, that gives the banks the capacity to tell the bankers, okay, here's your deals, here's your packages, here's the credit, here's your offers that you could extend to clients because they got to get liabilities onto their books to balance the books, double ledgering accounting style. I'm less interested in X33 model as well because of this. Not I have I highly dislike things that can be sold. I like the idea of purchasing things. And I want my purchases to be permanent because accounting sucks. Accounting is diablo, is evil, especially what these governments want us to do. We have to account for everything and you have to be consistent. That's probably the biggest thing. As long as you're consistent with your accounting, you fall back on, all right, this is what I've been doing for the last decade. What do you think? It's a legitimate question. So I just don't like non-locks. I, when I found out about locks that I can make a purchase and I no longer have to think about it after I make a purchase, now that's the mindset that I approach investing with. Do I want to buy this? No backsies. Can't triple stamp with double stamp. No takesy backsies. Okay. And it's a permanent thing. And that means a lot to me. And that simplifies the entire equation. Hope that helps, ladies and gentlemen. If you're on X or on YouTube, please feel welcome to ask any questions. Otherwise, we could easily have a relatively short stream today, which is not necessarily a bad thing. Good morning, Fugu in the house. Laura the Pine Cones, Tom Lee and Binance saying 2026 will be extremely bullish for crypto. I think they're just trying to pump their back so they can dump. What's the opinions on top of opinions on top of opinions? What's pertinent is the macroeconomic conditions. You look at the DXY, the move in the 10-year, which is basically a manifestation of a lot of more detailed data. But I look at those three things, that gives me a 10,000-foot view of the entire thing going on. And clearly, Japan is in a precarious situation. Um, their bond market is scary. Their currency did bounce off the 200 SMA, at least on the 4 hour. Let's go out to a longer time frame. I mean, it's precarious. Precarious what their yields are doing. We could easily see, carry trade reversal. I mean, how much could the Fed cut? If, if Japan raises rates and the Fed is cutting, that's literally carry trade reversal fire, fuel on the fire. And that's yen carry trade is literally a significant component of global currency supply expansion. I mean, a lot of it is literally just yen that bought other currencies because the damn interest rates were so basically free. It's free money for decades. And now with the interest rates in Japan, ooh, goodness. Yeah. But it's precarious because if they're paying these high interest rates, how are they paying these high interest rates? What's going to happen to the value of their currency? Like if the interest rates in Japan keep going up, and this chart, USD JPY keeps going up, they're not even folks aren't going to even buy their debt anymore because they're just going to be like, uh, I'm just what am I getting if I'm getting 5% on JGBs, but the currency keeps crashing in value? So we're entering some very interesting and concerning slash worrying times. But worrying implies the powers that be, uh, the, the central banks, as well as the fiscal authorities, are not willing to exercise geopolitical collusion. So that's my base case. I'm maximum cynical, and my understanding is this world is operated by constant geopolitical collusion. This is a managed global financial system, and We are past the point of no return where anything happens organically. This is an entirely managed financial system at all angles and all levels. It's the only thing that makes sense to me. Mainnet and base exposure, and now with Solana, it's just Curve Eco Arrow position. What else to own? Not much. Not much else really stands out. Um, oh, the other thing that I exited for more yield basis exposure was some lingering liquidity exposure that just melted. I just don't believe it's where in what it's going to potentially become anymore. Um, there's not much Arrow, but that's the whole thing. All you need is the Microsoft and the Amazon caught Netflix early. But the difference is these are better investments than that shit because these are permanent and you can't mess things up. And these things pay dividends that are proportional to cash flow. And those things never did. The potential for these investments are extraordinary compared to those early investments. You know, uh, I just can't describe how how much I think that's the case. I mean, 20,000%. All right, 20,000%. What does that do to the APR on basis? Oh my dear Lord. You know, you invested 10 grand in Microsoft and it's paying 50,000% in basis because it's up a half a million percent, a million percent. So 10 grand and it's paying you $1 million a year, 20 years later, 15 years later. So that's the type of calculus involved with the monetization of an entire market. Because back in 2020, everyone was like, "Oh, .com," and everything collapsed, and it took like 15 years for everything to reinflate. All right, sure, but uh, the potential of the potential comparison that I've always seen is they can't do that any longer for equities. And this is a post I did shortly ago. They can't do that in real estate. There'll be political fallout if home prices double. Be a catastrophe. And if equity prices double, you just have disparity extreme. And people will really start to get pissed. But you can blow a crypto bubble. So that's exactly what occurred post.com in 2002 to 2008, 9. There was a real estate bubble. Then in 2012 to 2019, there was a stock market bubble. Then obviously everything blew out past 2020. That hasn't worked out well. So the point is, they see clearly that the political optics are pretty shitty for blowing a bubble in equities markets post 2020. That's not pretty. So they can't do any more bubble there. They got to keep the capital somewhere else. They got to get the nominal tax receipts up. Why do you think they're talking about all these tax rules for crypto through exchanges? Why do you think? They got to blow a bubble in the crypto markets and they got to get their tax receipts so they could pay nominal interest expense on national debt and pay the fiscal deficits. It screams obvious to me, ladies and gentlemen. Screams obvious. McGee, no. Buenos días, señor capitán. Gracias por todo su guía. You're very welcome. It's always a pleasure to do what we do and talk shop. Um, and it's a bit of a red day, so don't let a red day get you down. Hopefully, some yield basis is printing you some cash on a day like today. I mean, 12.8% on a day like today is nothing to sneeze at. So this is interesting to say the least. That was the whole point of what I wanted to talk about. It's just something that stands out to me on a day like today, not just because of price. I think the price is a manifestation of the XYZ equation and where this fits in as a business. Where does this fit into the five businesses? I mean, there's got to be components of liquidity financing. There'll be boat rentals at some point. Um, is it a derivative? And then I'm going to shoot myself in the foot if this is a derivative. I mean, it's a manifestation of foreign exchange. It's really it's forex. It's capitalizing on trading fees for the supported assets. And right now that's Bitcoin. So this is foreign exchange, will be liquidity financing, and that's it. It plays a role as the synergy that is there for um, enhancing the credit business of Curve. So that's cool. So I think that's a reasonable statement. I don't think it's a derivative. And I think we could leave it at that. Let's keep it short and sweet today. Ladies and gentlemen, thank you all for joining me. I appreciate you on a Friday. Stay rational. Remember the five businesses in crypto. Remember the four rules or more assets. Know when to stop buying assets. Fuck you, pay me. Rule number three. And never neglect the cash position to prevent being a forced seller. Last question, and I'm going to wrap it up. Bitcoin only though, so not really Forex. Yeah, but Forex is really foreign exchange, the capacity to exchange one asset to another. So obviously it's not a rich market, but it's getting its revenue sourced by the exchange of foreign assets, particularly dollar stablecoins and Bitcoin. So two completely foreign assets. Good morning, Cap. Bought a little yield basis just before the fee switch. XYZ. My man, partial knows. Cappy thinks the Dems potentially winning midterms in 26 could be existentially negative for crypto. Seems like no matter they choose to see crypto as a negative light. I don't think too much about politics. All I know is that everyone is wrong. That is the most important thing to always remember. The majority is always wrong, and the majority is always caught up with right and left, and the narratives get so spicy. Meanwhile, knowing that everyone's wrong, the reality is it's always government versus the people. The government causes all these problems and it causes this bifurcation of society into right versus left. It's always the government's fault. And it is a shame that people can't point their fingers at the right culprit, which is the government. Is crypto inevitable at this point? I think crypto is immutable and I think it's deterministic. Therefore, I think it's inevitable. That's my opinion. 233 people made it to the end of the stream and are now that much more rational because of it. You know the deal, five businesses, four rules, XYZ. Have a wonderful weekend. Sit in the sun, hit the gym, hit the sauna. Y'all have a good one. I'll see you next week. Till then, peace.